All right, yeah, let's get going. Hello, hello, hello. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. Thank you for being a client. Today is a Monday, the 18th of May, 2015. That means we're going to cover the Commitment of Traders report. We're going to go through the calendar for the week, look at our risk events, and if we have time, we'll do some technical analysis. Sounds pretty good, eh? Well, let's get going. This video will be uploaded to youtube.com as soon as our event is over. So please take a look, give it a like, and leave a comment. Let me also remind you that the purpose of this presentation is education, trading and investing. I can't think of talk. What did I just say? The purpose of this presentation is education. Yeah, I think I said that. Trading is risk not appropriate for everyone. Your past performance does not predict future results. So stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. There we go. The government should be happy with that. All right, a little technical analysis. Well, let's do some technicals, and then we'll go into the fundy stuff. Lots of requests for Euro USD. Okay, so how do you want to play this? I would cautiously. Remember, what we said last week is that I'm a bear, but this has been going up for a very long time. So what I'm looking for is a lower low, lower high, lower low scenario. And when I get that, I'll be aggressively bearish. Have we seen that yet? No. So I don't have to be aggressively bearish. The world's greatest price action for a bull either. Let's see if I can. Okay. And then probably here. What do you think about that? And of course, the next one is the lower one. And we'll play that. So, boy, I'm not eager either direction right now. And I hope that's apparent. Seems like we're having trouble making highs, right? Just maybe that psychological level of 115. I mean, there's no other importance to it, but 115 is what, right here, something like that? There's no real except it's psychological to a human being. And so we're consolidating quite a bit here, right? And you can see dipping below this area would be very bearish. So it's not bearish yet. Fine by me. Next. Pig yen. Do we have any pound yen traders? You like the beast? I wouldn't call it trend trading at the moment, would you? Okay, the 21 is dead. The 55 is dead. It should be coming back to the 200. So the way I would play it at the moment is arranged this way. Okay, I'm not expecting down yet. So I just need to mark it. So maybe down to the weekly central and then head back up, and what will happen is over time, since the 200 EMA is a lag indicator, eventually it'll come up and touch that price. Okay. So it kind of looks like this. So a lot of things starting to consolidate. Okay. Which means you use different tools, right? We've talked about this a lot in the past. Okay, USD yen. That one I like, except it doesn't move anywhere. So what's your strategy on this one? Buy it at major psych levels? Well, you had a chance at 119 last week. And, you know, maybe you're long, and that's about it. Long and holding. The range here is only about, and it's not really going anywhere fast. Okay. The only thing is, any frustration you might have with this is because you expected to do something different. But as far as technical analysis is concerned, you can see that we're just going up and down in the range. So I don't know why you'd expect anything more than that. Maybe it breaks to the top of the range. Oh, cool, right on. Is there any reason it has to do that in May? Or June? Or July? Or August? I mean, this seriously can continue doing this. How about this? I love this quote. The market can stay irrational longer than you can stay solvent. So hopefully, if anything, any frustration is buying it at the bottom, watching it come up, and watching it come all the way back down. Buy it at the bottom, watch it come up, watch it come down. And that was basically the story of the first 6 months of last year. So yeah, just until it changes, assume it's going to do the same thing over and over and over again. The same thing is in a trend. Assume it's going to continue trending until it stops trending. And in reverse psychology, that's what I'm waiting the Euro USD, right? I'm waiting for the lower low, lower high. And I don't have to be the one that creates it. It takes all the guessing out of the game, right? So, if you were a bull, is this a good place to buy? You're a little late. But, if you can stay on top of the monthly central and weekly central, kind of like where we are now, that's pretty cool. But, you're supposed to buy in when we're oscillating like we're doing now. Remember, the big lessons that we've been doing is buy at support when it's oversold, sell at resistance when it's overbought. So that's like Thursday or Friday. You had you're at 119. So here we are Monday. Are you doing it now? Well, I wouldn't call that support, and I wouldn't call this oversold. See, now this is overbought at resistance. Okay, selling up in here is cool. Okay, big difference, right? See, like this is a good sell, except it's not at resistance, so you'd ignore it. You want to be up here. All right, so start first. Are you near support or resist? That's the first thing, and nothing else matters. Nothing else matters. And then the next thing is, if you're at support or resistance, is it way overbought or is it way oversold? If it's one of those and you have an opportunity, you have permission to consider a trade. Okay? Just Captain Off just showed up. Hello, Mr. Captain. All right. Here we are on this one. And I want to remind you what our trade plan is. Is it clear? We've gone from, and I drew this arrow when we were still in here. This is hard to see, but I believe this is an arrow down. Must have been a different time frame that we drew it. But the idea here is like this. Okay. Any questions about that? No. Did you buy the triple bottom? We don't need the fibs because we're range bound. We're not trending. It can be, but it doesn't have to be, Mark. So he's asking about the correlation between USD or CAD and oil. Um, but we're not in a traditional supply and demand market for oil, are we? So I'd just be careful. I'd be careful using historical data. So the best thing is to go out and find that information. You tell me if we're correlated, and if so, are we positively correlated? Are we negatively, or sorry, inversely correlated? And to what degree? Strongly so, moderately so? Yeah. Because these things can and do change. Okay. But anyways, where are we on the Goldie? Getting farther on the high side. Cool. We got pretty good on that one. So one thing you do here is you take our current top. It's a 50% retracement. It's a top from there. It's a top from there. There's an old bottom. There's an old thing, and then there's this. So, you know, this is, I'd say a sell zone. But I'm going to think so because I'm a bear. So that's gold. WTI. And I'm still waiting to sell. Okay. Because the nice thing about analysis, let's say you just ignore all the fundamentals and all you do is trade the technicals. This is going up, but I don't have to buy it if I don't want to. I could just say, I want to sell it. Well, technically, where would I see resistance? I mark that up. When we get to resistance, do I see a reversal? And if I do, now I can start trading. And if I don't see it, I don't have to trade it. It's nice, right? Isn't that liberating? I don't have to trade it if I don't want to. I'll just wait for it to reverse. If it doesn't reverse, I don't trade it. Find something else to trade. So I'm just sitting waiting. If I'm wrong, we won't get a trade. S&P 500. Yeah, I think this is a sell zone. Let me zoom back in. Yep, certainly is. So a long time ago, I think we were down in here. And you can see I have an arrow set up here. So all I was saying is we'll buy at support and anticipate or assume that resistance will hold. We're up in there now. It could come back down, right? See what I mean? The question is, at what point do you consider it a break? At what point do you consider it a higher high? It's close, right? It's pretty close. But I don't know. Let's watch here. Now, I think you have heard me say that I think the stock market could go up for 5 or 6 years, right? So I think eventually it will break. But again, I don't have to guess. I don't think this is a clear break at the moment, so I'm going to assume that the sideways trend will continue. But if it goes, if it kicks off this 21 and makes another higher high, then it's undeniable. Okay? And we're close to that. I mean, it did make a higher high. I mean, I wouldn't call that an easy higher high. But if it came down, hit that 21 and rises, yeah, then it's hot to go HOTTOGO. Well, that's why the 21 is there. Like if you have a 21 EMA on your chart and you're not watching it, then why is it on your chart? See, in this case, when the 21 is above the 55, the market price, the market is technically bullish. Now, we're generally sideways for a long time, so there really isn't a market at this point. It's just sideways price action. But if we get, a slight higher high, then it comes down, hits the 21, which is supposed to be dynamic bullish support. If it kicks off like this, now we have an uptrend. And the 21 is in control, and we do have a bullish market, and everything I do changes. How I trade, the tools I trade, my expectations for the trades, etc., all change. But right now, that hasn't quite happened yet. I'd actually like it to happen, but it hasn't. So what I want is irrelevant. I'm going to assume it's going to come back down to here. Okay? If it does, right? If it does, then I'm going to think we're range from tools and have different expectations. Okay. But whether in the next 6 days or the next 6 months, right? One of them is going to make this go up. But I don't know if it's going to be 6 days or 6 months, so that's why I got to be cautious. Okay? I would like it to come down to, or even move sideways, wait for the 21 to kick it up. But again, what I want and what the market wants can be two different things. So I just have to wait until I get what I want. Just like my kids, right? So that's that. I hope that makes sense. Let's move on to the fundies. Okay. Let's do calendar. Filter all the nonsense out. Beep. Is it getting better? Do you feel the same? Does it make it easy on you now? You got someone to blame, you say. All right, just grabbing my tool here. What do you think? Yep. RBA looks good. UK CPI, a good number. We want, wants the pound to trend right now, but it is a little overbought for that. Building permits, don't worry about that. Pelosi, I don't know what he's going to say, but all right. Well, that's going to be a big one. Yeah, yen GDP we care about, right? Why? We need the Bank of Japan to come in and do something surprising. Okay? I want them to come in and do something surprising because I think what they've been doing, it hasn't been working that well lately. Okay? MPC minutes out of the UK, very nice. Why? When are they going to raise interest rates? Okay? That's what we care about. So MPC minutes, very good. Now, the MPC is sort of like, it's sort of like the FOMC. Okay? And then look at that, FOMC, median minutes. Very good. Now, do you want some homework? Download, actually read the meeting minutes from the Federal Open Market Committee. Oh my gosh, Wayne, that sounds like work. I want to be a millionaire, but I don't want to have to like download that PDF and have to read it. Well, then don't. I pity the fool. Okay, PMI out of China. Yeah, that'll be interesting. Worth looking at. It's HSBC, so you get two numbers. Just want to double check it. It's Kiwi. Okay, Kiwi budget. I'm not sure about that actually. Not sure how much moves the market. French. Nothing French matters. Nothing French matters. Anyone can see. All right. So don't really care about that. German. I don't really care about that. Retail sales. Okay, a good number is going to help, but any sort of bullish move out of the MPC minutes. But I mean, compared to MPC, if we get a bad MPC and a good retail sales, I don't know, it'll be confusing. Philly Fed, that tends to get watched. That could be a good scalp. Okay, and then Canadian CPI, yep, that's going to be good with some retail sales. That'll all be good because if you think about the CAD, if you can close your eyes and think about the CAD, we're range bound essentially, and we want to know which way that range is going to break. And all of this news is going to be good, my friend. That. Okay. And then could CPI out of the U.S. Sure, why not? Is it getting better? Or do you feel the same? Do, 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 do. Yeah, just double checking a few different things. So just tons and tons of central bank stuff this week. Should be really good. I mean, all the news is, how do you say? It's like, it's important news. It's interesting news. I don't think it's news that will rock the market in a bad way. To me, it seems like good flow, good data flow. And I think it's going to produce a pretty good trading week, is just the general feeling. None of this is crazy stuff, but a lot of it is important stuff, and I'm not expecting a surprise out of any of it. But the market will pay attention to like MPC meeting minutes, FOMC meeting minutes. They want to know what's going on in Japan. I think we're sick of European news right now. But we'll go with, UK stuff, Japanese stuff, some US stuff. I mean, yeah, it's a good mix. Some Aussie stuff in there too. It's a good mix. It's an interesting mix. I think it's going to be good for trading, and I think it'll be a good trading week. And anything else I haven't commented on, I think is just so-so. Okay, and the stuff I commented on, I think are going to be good trading events. So I feel good. How about you? Buzz, read the meeting minutes as they come out this week. Is anyone going to take me up on that? Okay, Buzz will. How about this? If you asked yourself, do you think a professional Forex trader should read the meeting minutes out of the Fed? Do you think would you expect that? So if you want to be a professional Forex trader, wouldn't you just fake it, even though you're not a professional? You don't have billions of dollars under management, and you're not that great of a trader yet. When do you want to do something great? I do a lot of speaking at universities, motivational speaking for college kids that are on the path to becoming leaders. And I ask them very often. I ask the audience, so you can imagine like 200 or 300 college kids from all over the United States, and are all in the audience. And I say, how many people want to be a global leader? How many people want to change the world? And all these hands go up. And I'm like, so what is it that you're waiting for? Right? Like, are you waiting to get like a degree or be certified, because then you'll be more experienced and you'll be more qualified to do something great? Or are you going to have to go and get a graduate degree? And I say, well, then I'll tell you what, and then you're going to get your first job. Then you're going to find someone that attractive and beautiful, that for some reason finds you attractive and beautiful. So you're going to have to marry that person quick before they change their mind. Then you're going to have kids, and all of a sudden you're going to be 42-year-old sitting in a cube at some god awful company somewhere, working a little too hard, getting paid not quite enough, and you'll say, you know what, I was going to great. Like, what is it that you wait for? I'm not a professional Forex trader yet, so well, just start doing great things, guys. If you want to be a professional Forex trader, start acting like one. Download the stupid meeting minutes and read them. For crying out loud, right? You want to be great? Do great things. Start now. Be great. And you'll always be great. Doing great things. Why wait to be successful, guys? Just be successful now. All right, so let's go through the COT stuff. This is Euro. Very little change. Yeah, Kareem is still waiting for the greatness to be handed on a silver platter, right? Is it not updated? Maybe that, is there an error there? Maybe that's what it is. If it's not, we'll skip it, but I can't. April, no, no, it seems right. It says May 4th. Remember, as of Tuesday of last week, let me see if I can somehow make this larger. I mess with this all the time, and that gets very difficult. This is the May 4th, so it didn't update week over week? Because it should be May 11th. All right, well, we'll just have to skip it if the data hasn't been provided. I'm just going to try to change the scale and see if it helps. Doesn't seem to. Now let me try change the currency pair. Yeah, all right. It just looks like it hasn't been updated. The software provider hasn't done that. For shame. So we'll just go on and do technical analysis. Okay. Got someone to blame. Let's check out the new weekly pivots. How does that sound? Does it make it easy on you now? Got someone to blame. Nice move here, huh? Just beautiful stuff. New buy zone is down here. So I would look to buy off the 21 or the weekly central. It's overbought. Should I be worried about that? No, not really. Why not? Because it's trending. It's bullish. Of course it's overbought. Everybody's buying it. Then you say, Wayne, you told me to sell when the oscillator's overbought. No, I didn't. I've never said. I said when it's moving sideways, you sell at resistance when it's overbought. When it's trending, I buy at support. See, there is no resistance upward trending market. There's no resistance. It's bullish. It's rising. It makes higher highs. So my job is to buy the higher low, buy the dips. And it could stay overbought for a very long time. Look at this one. Look, it just went up and 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 up. Why? Because everybody was buying. So don't confuse it. The market is rising. It's not range bound, so you can't use range bound strategies. Look how far back this one goes. It goes all the way back to here. So look at the clusters. Zoom in here now. The high side cluster for the week is a monthly M4, weekly M4. So if the market continues to be bullish, let's say it comes down to here, then it's going to go up to here, and that's our target for the week. the cluster in here. Ah, come on, I drew it. Come on, tool. Right here. And in particular, it's this cluster of weekly M4, monthly M4. It can go up to the R2, I don't care. Okay? And if it does it early, let's say it does that in the next 24 hours, then it's going to come down hard. Which means, let's say Tuesday, London Open. We're here. By the next London Open, Wednesday London Open, we'll be back at the weekly central. Okay? And I don't think we see any examples of that yet. Let me back out. Yeah, no examples here. It has to do with hitting your weekly targets too early. So if it's Tuesday and you've hit target, it's going to go back to the weekly central pivot point. Okay? You got that one, guys? It's, let's say, Tuesday, and you're at weekly R2, right, up top, or weekly M1, or S2, sorry, weekly S2, weekly R2, and it's a Tuesday, you'll be back at the central pivot before the end of the week. Probably sooner. But I don't have an example to show you. But anyways, that looks like it's going up, and I would still buy the dip, and the target would be up there. So I don't know, what is that, 35 and some change, 35.60, 35.70, whatever. Upside 38.5. Cool. Was that right? It happened on the Kiwi dollar. All right, well, we'll see if we can take a look at that. Let's take a look at Aussie. Okay, notice the 21 is dead. The 55's in control. So therefore, I'm thinking double. So up weekly R1, down. So I'm thinking 1 S1 this week, inside week. Any questions? How do I do that so fast, you might be thinking? Because it doesn't look, see how the 55's in control? 55's in control, not the 21. It doesn't respect the 21 at all. So we're going to respect the 55 again, and it's going to do something similar to this. It's going to go up, and then it's going to hesitate, and maybe, and eventually it's got to break the 55. So I'm thinking it's going to reset off the 200. That's an R1 S1 week. Up, down. We good? That's Aussie yen. Pig yen. I think we did pig yen. Let's do CAD yen. Clean this up a bit. Okay, 55 is already bending. We're going to play the range. We're going to come down here. Let me mark this up. Hello. We're going to come down to this area. And we've already topped out. Looks like the yen might get strong this week. Maybe while we wait for that the GDP numbers. Okay, so that's what I'm expecting here. What is this? Kitty CAD yen. Yen's going to be moderately strong. CAD's going to be moderately weak. Okay. Okay, make sense? Questions, thoughts? Kenny spotted divergence. That's cool. Right on. By the way, do we have any Elliott wave experts? But should you trade? No, I think you should start with one or two currency pairs and master them. So let's say you trade the British pound, and I say, so tell me about the British pound. You're like, oh, well, got the MPC meeting minutes this week, and upon review, blah, 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 blah. I'm like, oh, well, that's a good start. It sounds like you know something about the British pound. No? No certified Elliott wave people? All right. Do, 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 do. Ba, 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 ba. All right, let's take a look at Kiwi yen. Kiwi, 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 can't you see? Sometimes your moves just hypnotize me. Looks like it's getting tired, huh? So if CAD yen, maybe it's a commodity currency week, but that looks like a mess. What a terrible mess that looks like, huh? The only hope for this one would be the higher high, higher low scenario. That maybe it heads up because of the higher high, you know? Like it maybe, it's pretty hopeful. But it'd be interesting if it's what we observe. Like that. That's the opposite, really, of kitty cat, isn't it? Kind of looks like Gartley, doesn't it? Part of a Gartley. Any experts in Gartley patterns? What do they call it? Market frequencies. Do, 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 do. So all I'm noticing here is that the higher high could, how about this? Another way of drawing it. Okay, I think you can see that part, right? And then you move this to the bottom. And, oh, snap. Beautifully drawn, Wayne. Why, thank you. If that makes sense. Is that right, Jarek? How long have you been trading harmonic patterns? Is that right? If I asked you to come in and do like a PowerPoint presentation on harmonic patterns, could you do it? not asking you if you could do it. No? Do, 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 do. Well, send me a trade plan with one of your harmonic patterns on it. I'd like to see it. Okay. He's just playing hard to get. Yeah, there's tons of stuff, huh? All right, so there's a general overview of what's on yens today. Hang on, let me put in a. Let's go through some dollar pairs in a similar fashion. Look, a channel is a channel, Mark, so it's just to identify, deviations from the mean, et cetera, et cetera. It's a good way to identify direction of trend. Yeah, the funny thing about that, Eric, is when I first started trading, it wasn't on the internet. So a lot of what, you could twist it around and think, I've trained thousands of people over the last, 10 or 12 years, and none of it existed when I started trading. So now that it exists everywhere, did I have, at least in a small way, an impact on what is trained and how it's trained? There's a lot of stuff, if you watch, is very close to what I teach, and yet it wasn't taught before I figured it out, where I've spent hours, weeks and even years messing around with various settings and various indicators, and self-teaching myself currency trading and technical analysis. And there's lots of stuff that's very similar, but I spent hundreds of thousands of hours developing on my own. It's just very interesting. Yeah, Ron, Andrew's pitchfork's great. A colleague of mine, or a contemporary of mine, David Pegler, he spent a lot of time with Andrew's pitchfork, and so to me, I've always called them Pegler pitchforks, out of respect for him. But sure, to me, it's the same thing. Just drawn ways, and I use them to say, just Wayne realized that there was a trend here and now broken. So it's just a nice way to recognize that. But if you've studied like Andrew's pitchfork, for example, if you draw them properly, what it does is let's see if I can. What it does is it draws a pitchfork. It's almost like a channel, but with 3 lines. And if you draw them correctly, and this is what Pegler knew, it's like if you're at the high end of this down channel, there was something like an 85% chance it was going to come back and at least touch this middle one. And then if it broke here, there was a certain chance it would come back. And then to know the probabilities and stuff. And then it gets even more complicated when you're drawing your pitchfork this way on one time frame, then you change your time frame, and you may notice that there's actually a pitchfork this way as well. And to know how price should interact, you know, within these zones, right? Is helpful. But is it required and stuff? Bollinger Bands, another good question. Bollinger Bands are a volatility play. So the way that I use them, so let's just grab a different chart without so much nonsense on them. You know, let's go to Aussie dollar. I'll kill the pivots. Beep, beep. Kill the MACD. Beep. Okay. And then I'll throw on, because I use Bollinger Bands, and they're fine. I've used them for many years. I just don't have them here, and they're not required. So where's my Bolly Bands? All right, I use the standard, right? Thick, oh, green. Why would I want green? Dark khaki. Khaki. Whatever happened to just like colors like gray? How about light gray, silver? We'll go silver. Ooh. Okay, they're fat. All right. So, anyways, when they're expanding, the market's good. Okay. When they're contracting, the market's bad. And I tend to use them when when you're a bull and and you're returning to the bottom band like this one, very often is a place where this will go back up. So like you could look at buying near this lower Bollinger Band, okay? But it just helps you discern whether the market is trading or not. Sometimes you get situations where the Bollinger Bands are grown very tight. That means a couple of things. One, no one on the planet is trading, and you probably shouldn't be trading as well. But the longer the tunnel, the bigger the breakout's going to be when it does break out. So predict some sort of amplitude. That's a very rudimentary overview, but trying to see if there's any good examples in smaller time frames. No. But just notice, like, in a good downtrend, you notice this massive retracement. Wait for the pullback, as we all know. And then just rides in the bottom end of the bands. Nice, huh? Break. But they're just volatility. Oh, here's a tunnel. It's not a very big one, but I've seen it where it does that for hours. Okay, and then you want to see it open. And if it opens, it'll look like that. So they're fine. You know, I used to use them all the time, but you know, all of a sudden after a while, you just you can see them with your mind, right? You don't need to draw them anymore. Do you use any combination with Bollinger? Look, everything is a combination, Eric. Everything's a combination. But what I've been trying to explain to you is I don't care what tools you need. And in fact, you really don't even need any of these tools, really. The first thing you need to be able to do is answer the basic question: is the market trending or is it range? Okay, I need you to answer. Second of all, I need you to identify where support and resistance is. Okay? So if you use no tools at all, no moving averages, no nothing, In fact, I probably have something like that drawn. I don't think I do, so let's just do it this way. Okay, you see this chart actually had bands on them. Okay. So this is all you have. It's enough, guys. You can be a professional Forex trader with just this. Okay? So the two things you, or three things you need to know is identify whether you're trending or moving sideways. Okay? The second thing to do very well is identify levels of support and resistance. Okay? And then the third thing is be able to sell at resistance and buy at support. Ideally, if it's a downtrend, you're selling at resistance, and that's it, over and over and over, and sell at resistance. If you're range bound, you buy it, you sell at resistance, buy at support, sell at resistance. And if the market's trending upward, you're buying dips, and that's all you need. Woody CCI, sure, whatever. It's just other stuff that other people invented, guys. But they all tell you different things. It doesn't matter. It doesn't matter where you use stochastics, RSI, CCI, whatever. MACD can be helpful. You don't need it. The only thing that I think the one thing I would add immediately if I were to add an indicator would be a pivot point. Right? So that's what I would do. Let's see. Not daily. Like maybe weeklies. Okay. I'd probably use that. That'd be my setup. Done. Oh, I'm using Camtasia Studio. I don't know if you can see that. Probably not. I don't think it can. It's just Camtasia Studio used for recording videos, and I can draw things. It's just better than other options. So, you know, honestly, that's all you need, guys. I'd rather you spend a year learning fundamentals than spending a year learning a bunch of technical indicators, because they inevitably same thing for using 6 or 7 different ways. You know, if you use, let's say, a bunch of oscillators, they all generally tell you the same thing. So why would you need to know 6 of them? And if you did know 6 of them, they do tell you the same thing, but using slightly different mathematics. So you get in a situation where 2 of them might cancel out the other 4, and now you're caught in between. Well, I'd rather you just know one and get one signal and make a decision. More oscillators are not going to help you make a better decision. They're just going to make you be indecisive. So I'd rather you just say, you know what, I'll just use price action, right? Look, buy. Why is it so hard? Look, so you buy that. Just learn price action, and if the market's bullish, buy its support. Why is it so complicated? If it's bullish, buy its support. Okay? So that's what I'd rather you do. And then to be able to explain to me why it's going up means that eventually you'll be able to anticipate that it may go up in the future, and you'll already be looking for signs that it is in fact changing direction. Okay? But I think simple is better than more complicated, guys. Indicator, I'm using a bunch of them. So I have 2 or 3 different pivot indicators. It doesn't matter because very often you can't run the same indicator twice on the same chart. So you got to have one for weeklies and one for monthlies and stuff like that. Okay, so just tick price action, guys. Identifying support and resistance. And then that's why I want you to start with what the market conditions are. Because support and resistance is helpful, but you have to know how to use them, right? So if it's trending, you'll say, oh, well, it's trending up, so I want to buy its support. Every time it comes back to support, I'll want to buy it. And then price action will tell you when the bullish trend has changed, because it'll make a lower low, and that doesn't belong in a bullish trend. So you can say, uh-oh, well, we'll probably consolidate. So now you can immediately change and say, now I can sell at the next resistance. Very, 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 very simple stuff, guys. Very simple. That's what I want for you. Very simple. And then after a while, let's say after 2 years of being able to trade with basic, simple, understandable, repeatable, conservative trading knowledge, right? Then you can start folding things in there to make you more refined. Okay? Even before that, I think you should master multiple time frames so that you can say, well, it's bullish on the daily, but bearish on the 15, so I'll know how to cycle this in. I can be, you know, short-term long, but long-term short, and you can think about how today fits in the context of this week. Okay, that's even more important than folding in a bunch of indicators. Okay. And then one last thing, because like RPP says he likes the Bill Williams fractal oscillator thing, right? Good. I would say if you play with it for a while and it seems to work, seem to like it, learn the math. And if you can't explain to me what it's actually doing, then do it. Learn the math. I mean, you should know what it's doing. Is my advice. Well, I don't use it, so I don't know, right? But you should know what the math is doing. You should know what the math is looking at and calculating, and you should be able to describe it to what, you know what I mean, to somebody, and not just say, well, when it's down here it means buy, and when it's up there it means sell. No. What is the algorithm doing? Okay, I'm not asking you to tell me now. I'm asking you that you should know it to that level. Okay. So, all right. So let's gather tomorrow and do some additional analysis, and maybe we can do some trading as well. Throw down some shorter-term trades. Does that sound like a plan? Yeah, and maybe the COT. I have a feeling it won't be. I mean, I don't know why it's not updated, but it's not my software, someone else's software, so we'll have to wait for them. So anyways, hey, thank you for being on my team. Thank you for being a client of TradersWay.com. I'm going to drop you onto our youtube.com/c/TradersWay page. Would you please leave a comment or a like on our last video, and the new video, today's webinar, will be up there in an hour. Yeah, my email address is wayne@fxbootcamp.com. . I do want to hear from you guys. If you're finding success, I'd like to know. If you are trading success and are trying to become a professional, maybe you need some money. I got money. So send me an email, let me know. If you're learning to be an expert, like we're talking about, if you're an expert in Gartley's or Elliott waves and stuff like that, maybe you're willing to share some of your expertise. Email me, let me know. Yeah, money's the easy part, Pepino, right? Money's the easiest part. The money is just, the world is flooded with money. What's rare is a conservative, disciplined forex that could be counted on for conservatively but consistently producing, low risk, reasonable reward returns. If you're one of those guys, let me know. The money's the easy part. The thing is, very few of those guys exist. And and I've reviewed people that have traded for years, and then I look at their trading history and I'm like, I wouldn't give you a dime. But I've been profitable for 3 years. Yeah, but when I look at the risk-adjusted performance that you produce, I just can't believe the volcano hasn't exploded, right? I mean, it's one of those things like you live on the side of a volcano and you're like, hey man, we've lived here for 3 decades and we're fine now. Yeah, but tomorrow you're dead. Buried under, rubbish and poisonous gas. And I mean, hey. So yeah, great. Yeah, Tim's like, I don't want no single money. Yeah, totally. Yeah, totally. I'm with that, Tim. So, anyways, hey, peace on earth. May the pips be with you. May your profits be above average. Yeah, thank you for being on my team, and I'm here to help. Honestly, if there's a way that I can help, just let me know. All right. Cheers.